In this video, guys, I want to talk about rules for scalping on a 1 minute chart. Super aggressive scalping. Stay tuned. Hey guys, warm welcome to you. All right, so scalping on 1 minute chart is super from a kind of operational perspective would be to, number one is focus only at key areas. So what I mean by this is, so example at the open, that's a key area, key time when there's going to be activity. A prior day's high, that's a key time where it kind of could break through, it could fade. What about a multi-month support? That's a key area. So focusing your energy only when something could happen that's going to give you a substantial move to make it worth your while watching that screen. Because don't forget, it's super intensive, it's super focused, there's a lot going on when you're scalping, there's a kind of a lot of cognitive load, a lot of things going back and forth, and so if you limit the amount of times you are fully focused, you will perform better. Scalpers make the mistake that they try to stay focused all throughout the trading day, and they lose focus. We're human beings, guys, we're going to lose focus. So trying to stay focused at specific times and then going full focus is much better than trying to stay focused all throughout the day. So only focus only at key areas, and those key areas are key levels, key points in time, that type of thing. Number two, make sure you're aware of higher time frame price position. Easy to get caught up, guys. You've got the 1 minute chart there, you've got your ticket, you're back and forth, you're trying to eke out bits, little singles. Sometimes you get some runners, you get a few losers. You tend to get so caught up in the nuances of the 1 minute chart, you forget to go, whoa, let me take a step back. This is where multiple screens come in. You don't have to go crazy, but if you're scalping on one screen, just having another screen or two with the higher time frame on, so you can quickly glance, where are we, where am I myself? And if that's not possible for you, then just having a checklist before you trade and going, higher time frame is trending up. Maybe I want to be, scalping from the long side here, or we're in a range bound condition, I can trade both ways, or we're coming up to a really, really key level on the monthly, across multiple months, not necessarily a monthly chart. So I need to watch out for that, because if we get to that, rather than just fading it like I normally do on a spike to it, maybe I want to be careful for a month. You get the idea. Make sure you keep that and aware of the higher time frame price position. Number three, be very strict with breaks. I'm a big fan of this, guys. And this is kind of not an operational thing from a trading and setup perspective, but when I'm really in tuning the markets and trading very, very actively, taking a break is just the best ROI you can get. Believe it or not, it refreshes you, you come back, it's a clean slate, you can split the day into 2 or 3 if you prefer as well. So at the open, go away, come back and trade the close, or trade the US open and then the US close. If you're in Europe, do it the time frame you're in. But breaks allow you, leverage on breaks. I'll just leave it there. Leverage on breaks, guys. You might not want to be away from the screen because you perceive you're going to miss opportunity. I get it, that's what's going through our mind, but force yourself to take the break, you'll feel better for it. Number four, have a set of filters that allow you to trade. So this is basically when you go, right, I'm not going to trade unless the volatility is this high, or I'm not going to trade unless we're above this level, or I'm not going to trade unless our opening range is X. It's something that will allow you to get involved in the markets, normally volatility based, ATR, something like that. And what it means is you're not trading a stagnant market, because even as a scalper, guys, and even with the type spreads that Pepperstone offer, you're still going to be racking up commissions. If you're trading a CFD, you're still going to be racking up commissions. There's still going to be costs involved, however cheap they are. And so you want movement so you can actually extract profit, because if there's no movement, then they become significant cost of doing business. So you want some movement. So the filters, multiple filters are there to stop you from trading when the environment is not conducive to good, profitable trading. And 5, get a good way of refocusing. Scalping has got a great way of hammering you emotionally. You get frustrated, get annoyed, you miss something, because literally a second you've missed a fill. You're delayed by a bit, you've got a bit of slippage. So find a way of refocusing and recentering yourself, whether that's kind of breathing, whether that's going for a walk, whether that's whatever that happens to be for you, find a way and make that a habit. And that's going to be something probably that you study outside of trading. You go, hey, I need to kind of study some books on breathing techniques to recenter myself, or meditation, or this or that, the other, because I'm going to use that in my trading. And when I feel frustrated and angry, I miss feels about a couple of losers, or blah, blah, rather than then trading on tilt and getting even more frustrated, emotional trading and all those things that are going to have a negative consequences to your P&L, you go, right, take a step back, take a few minutes to do whatever you need to do, recenter, refocus, and you're back in, and then you can accumulate that back again. So that's a really key one as well. Sixth and final one, guys, be in tune with your emotional state. I guess it's similar to number 5, but it's understanding if you're trading out of frustration, if you're trading out of desperation, if you're trading out of anger, fear, greed, all these things, recognizing it and saying, hey, you know what, scalping has a great way of making me a bad trader if I'm trading from a real emotional perspective. So be very good and very astute and aware of that you're cool, you're calm, you're relaxed, you're focused, you're not overconfident, you're not cocky, you're not angry, you're not all those things. And if you can recognize that, then you can be in the sweet spot of trading and sweet spot in terms of the key levels and understand your higher time frame position and being strict with your breaks to give your body and mind a rest and all the cognitive load that's going on, filters to stop you trading in bad environments, you get good way of recentering when things upset you and knock you off balance, which they will, then, scalping on a 1 minute is there and there's the opportunity.